look at some cattle situation that we're in. Cattle prices remain strong. I think most of your producers are probably still pretty satisfied with where cattle prices are. We probably are starting to slowly see some heifer retention. Uh, we really won't have tremendous heifer retention until this fall. And fortunately, we have had the recent rainfall in our region and across most of the southeast, which is where most of that drought was uh, centralized or targeted. And so that's going to, if we continue to receive rainfall like we have the past couple of weeks, there's going to be some opportunities to retain heifers just because we're going to have adequate hay and forage resources. Uh, Stocker operators, feedlot operators continue to sink a lot of dollars into each animal, and that just is continually increasing the risk and it's squeezing the margins. So if you have some stocker producers in your county, or if you are one, you're going to know that, or if you've got somebody that's buying cattle and put cattle on feed, because we have several people in our state that purchase cattle, straighten them out, and then they put them on feed, but they're all going to be getting squeezed. The only person that's not going to complain a whole lot right now is the cow calf producer, which is most of our producers. So most of your guys will be happy, and then there'll be a few that are going to struggle just because of the capital investment. I mean, when you're paying $2,500, $2,600 a head for a freshly weaned steer, it digs deep into the pocket pretty quick. So looking at slaughter steer prices just on the front end, because this is the final output before the product actually becomes beef. And we've been seeing record prices. Saw record prices a few weeks ago. They've slipped off a little bit. The problem is we should be seeing, from a seasonal standpoint, we should be seeing slaughter steer prices strengthening right now. But we've pushed beef prices so high, we've pushed cattle prices so high. The packers losing money. The feedlot is the feedlot operators are still making some money, but it's not a tremendous amount of money, and they continue to buy cattle at a rapid pace that are very expensive, and so the future looks kind of dark as far as, well, no, I should say the future looks red. The closeouts look red instead of black. So in other words, they're going to lose money on some of these cattle at some point. And so the Packers pushing back a little bit. The Packer has slowed keels tremendously to try to manage what's going on because they don't want to put too much more beef out there on the market because they want to keep the beef price elevated. And we'll show something on that here in a second. But just quickly looking at uh, what's happening in the state, we see where the 550-pound steers, they peaked kind of at their general time. We never hit that $5 mark. That's not to say that some of these cattle didn't trade for $5 because you certainly had some 550-pound steers that traded for $5. There's no doubt about that. But on a weekly auction average, they didn't get that high. But some of your higher quality, fancy type calves definitely did that. And then if they were weaned and preconditioned type cattle, there's no doubt they did. Uh, but it's amazing that last year in 2025 around $3, and this year we started above $4 a pound. So calves this year are essentially worth 500 more dollars than they were 1 year ago, and that's been the case through the first 5 months of the year. So we thought we were getting a lot of money for these calves last year, and now we're essentially being paid 500 more dollars a head for them this year. I don't know if that's going to persist per se, but I mean we are going to have prices above year ago levels the entire year. I would suspect if they were to decline below year ago levels, uh, I would be extremely surprised. 7 to 8 weight cattle, similar situation. We should be seeing these calf prices increasing, these feeder cattle prices increasing. The CME feeder cattle index, which is a 7-day weighted rolling average of 700 to 899 pound steers in a 12-state region out west. It's stalled, and you can kind of see that even in our 7 to 8 weight steer prices. They're just sure we're a little higher than we started the year, but if you look at the past couple of months, uh, the little anomaly there for a week, light volumes can do that to you, can have those little anomalies, but we're just not going to see these prices increase and increase and increase over the summer like we would generally have for true yearling type cattle. I think we've kind of peaked on that. I'm not saying we're going to decline. The futures market says we are. The futures market collapsed 2 weeks ago. 2 days we lost $20 on the August feeder cattle contract, but yet the CME feeder cattle index is only down maybe $4 or $5 in 2 weeks. So not a big deal, and some of that was influenced just by Memorial Day, some slowdown there. The animal that's still of great value is the slaughter cow. I hate to see people hold on to a cow to get one more calf to see her die. And then you don't get a calf and you don't get any revenue out of the cow. The value of these animals is still really strong. Actually, I think there will be more resilience in the slaughter cow market than there will be in the calf market just because of the demand for ground beef. And these slaughter cows are one of our primary sources for that lean grinding beef. So we either get it from the trimmings of finished cattle, we get it from slaughter cows and slaughter bulls, or we import it. And what we do know is most of us, if we can't afford a steak, we're all right with eating a hamburger. And there's going to continue to be really, really strong demand for that hamburger. I don't see that consumers are going to change that anytime soon. But again, here we're looking at prices that are probably $20 a hundredweight higher than a year ago. And when you have a 12, 1,400 pound cow, you're well over $200 increase in value over the past year. So just keep that in mind as producers ask, well, should I keep these cows another year to get another calf? What are calf prices? Well, if she needs to be culled, go ahead and cull her because she's very valuable. Reinvest in younger stock that might be an improvement. Now, here's where the Packer really has come into play. They have really slowed their. I don't know if anybody really keeps up with cattle on feed. I do report on it on a monthly basis when those reports are released in market highlights. So there will be a short little abbreviated synopsis of what happened in the cattle on feed, and cattle on feed numbers end up. What's the total cattle on feed as of the first day of the month, and then how many cattle were placed the previous month, as in how many entered the feedlot, and then how many were marketed, so those that exited the feedlot, and then there's other disappearances, maybe deaths or something like that. But that all comes into play in this total cattle on feed report. Well, cattle on feed has been continually increasing and increasing and increasing, and that's not because we have more cattle. That's because we've slowed down our slaughter rate tremendously. And the packer, being that they're losing dollars, and I say that because they're literally paying more for the finished animal than the meat is worth when they harvest and package it. So the only thing that they can really do to manage production is just cut back on their slaughter level. So heifer slaughter's down nearly 10% year to date. That does start to give us a little bit of indication that maybe we are starting to hold some heifers for breeding, because steer slaughter's down 7.6%. So there's a 2% difference there. That's not tremendous retention of heifers, but at least it's not. I guess probably for the past year, 15 months, 2 years, those numbers have kind of tracked exactly together. And so at least now we do have a little separation there. Beef cow slaughter is down 16.2%. I would say we probably have cut into our slaughter cows so deep just because we moved them and moved them and moved them because of the challenging conditions we've had the past few years, that there's really just not a whole lot of cows to go to slaughter relative. And in essence, we might end up in a year or two we might end up having one of the youngest cattle herds we've ever had as far as in production, just because we're going to retain a lot of heifers. And a lot of those animals that have been sold the past 3 or 4 years were those that were retained back in the 15-16 time period, when we retained a bunch of heifers for breeding. Now, what's that led to? Beef production is only down, well, close to 6%. Even though we've got tremendous decline in slaughter levels, beef production is not down near as much, and that again is just because we keep growing them bigger and bigger and bigger. Not uncommon for live weights to be well over 1,500 pounds right now, and that's pushing carcass weights right at up to 1,000 pounds. 950 to 1,000 pounds in a lot of cases, which are really really large carcasses. Which when we do feed cattle longer and we do make them bigger, that results in more fat, which then encourages us to need more lean grinding beef. And if we can't get it from cows and we can't get it from the trimmings, we then import more just because we have more fat to mix, so that we can make more ground beef. Pork production's up slightly, broiler production's up slightly. I think the way this situation is, especially with where beef prices are, uh, the hog industry and the poultry industry really should be taking advantage of high beef prices and trying to figure out a way to wiggle in and capture more market share. But I'm not sure that they've done that successfully at this point, and that's largely because the preference is for beef. But still doesn't mean that they're not going to be trying to wiggle their way in, and that's perfectly fine. I think there are some great opportunities from that standpoint. Imports well above year ago levels. I mean, essentially a 20% increase in March, which is pretty, I mean, that's pretty much where we've been, 10 to 20% each month higher than a year ago. And so we're probably going to continue to see that throughout the year. Uh, we will probably continue to see strong imports from Brazil. We're going to continue to see strong imports from Australia, New Zealand, well, of course, Canada, whatever we can get out of Canada. We're probably going to increase imports of beef from Mexico pretty significantly since we're not bringing the cattle across, which I'm sure some of y'all have seen where the latest report was that there was they've identified an animal, I think it was a goat, that had New World screwworm, and it was within 25 miles of the U.S. border. 25 miles is not very far, uh, which, I mean, y'all know that. Y'all know what 25 miles is. Most of you drive 25 miles uh, pretty regular. But, it's not just domesticated animals. That these flies don't just get on domesticated animals and travel, uh, or lay larvae. So, we've got to think about what's going on there. But we're going to be importing more beef from Mexico just because since we're not bringing those cattle across, they have to do something with them. So we're probably in reality helping Mexico to develop their beef processing due to the fact that they just can't ship cattle to Texas, New Mexico, Arizona, those states, and so now they're having to do something with them. So they're going to feed them a little while, then they're going to kill them, and then they're going to ship them north where the demand for that beef is. So just keep that in mind, and we may never see the same number of cattle coming across the Mexican border. We may just see it in beef form instead of in cattle form. Exports are down considerably. Not surprising. Our beef is so expensive, we're producing less of it. So we're going to have less beef uh, to export. So I don't see this changing. Still, Japan, South Korea remain our two top markets. Oh, well, yeah, I guess I did include uh, these graphs. I apologize because I thought maybe I had hit them instead of I knew I updated them. Just thought I might have hit them. But here are our major import markets. You can already see an uptick in the Mexico. in the green line there. If you're colorblind, I apologize. If you are, let me know and I'll change how this looks. Uh, but we're gonna we see the spikes from Brazil, and this year I think that Brazilian market, we just got such a high price for beef. We're going to continue to see more beef come from Brazil. But I do think Mexico will start to see an increase in Mexican beef just because they have it there and they need to get rid of it and it's close and we need it from a grinding standpoint. And so that's what will happen. But as far as exports go, like I said, uh, Japan and South Korea remain our two top markets. We'll see if there's any more headway made with China in any form or fashion. Uh, I don't know that there will be or there won't be, um, but there is a push there to get them to recertify the facilities for beef to come from certain facilities in the U.S. to go to China, and that's one hurdle that has to be overcome pretty quickly for any beef to move. This is where we go back to, so box beef prices have been relatively high. We set a record last year. If we just take out 1 week during coronavirus, if we just take out that 1 week of data when prices spiked for box beef tremendously, last late summer of last year is when we peaked for box beef prices, and we've had prices this year above year ago levels the entire year. I don't know if that will actually persist. I have a feeling we will drop below year ago levels at some point, and that may be sooner rather than later. We'll just have to wait and see. Um, but I think it's going to be a struggle. It's going to be a struggle, especially with high fuel prices. And the reason why fuel prices are important in this is we have a certain quantity of disposable income and discretionary spending. And anybody that uh, does any travel during the summer has already realized it doesn't matter if you're flying there, if you're driving there. Uh, an airplane ticket is more expensive because of fuel. And if you're thinking about driving to the beach or to the mountains, or it's going to be more expensive with $4 fuel than it was with $2.50 fuel. So it's not just farmers and diesel fuel that are feeling this impact; it's also the consumer. And so when the consumer has to spend 400 or 500 more dollars just to get to their destination, then that leaves them fewer dollars to spend on things like eating events, or eating experiences, as a lot of people want to call them nowadays. And so that cuts back on the number of steaks that we sell. So just something to think about there. So I think it's those types of things are going to make it difficult for us to push beef prices higher. Again, I know Tori already showed the drought monitor, but her one perspective is from the crop side, which, when you look at the major crop producing regions, not a whole lot of drought there. Actually, they've been wet in a lot of those regions. Whereas cattle producing country, the southeast, the southern plains, the west, even up into the central plains, and I guess into the northern plains when you get down to it, that we've had just tremendous drought. And of course, in Tennessee, drought looked much worse 2 weeks ago than it does now. Several counties in our state qualified for drought funding from the Livestock Forage Disaster Program. Uh, so make sure your producers, if you have producers in those counties, let's make sure uh, that those people are signing up for that money. I mean, we've got West Tennessee, Middle Tennessee, and East Tennessee where counties were affected. Not all counties qualify. I'm not saying that they shouldn't have, but they don't all qualify. But I would make sure that people are talking to their FSA offices to get those dollars, because those dollars can come in handy, especially if they need to buy hay or other feedstuffs. So just keep that in mind. But regardless, when we have large portions of the country, especially cattle producing country that are in drought, that's where it becomes difficult to make heifer retention decisions. Now, the best thing about this is drought this time of year doesn't always necessarily influence heifer retention decisions. Those a lot of times it's the drought in late summer and early fall, since most people are calving in the spring and then wean and make those heifer retention decisions in the fall when they wean calves. If this situation improves, then we'll probably see more heifer retention locally and across broader regions of the country if they receive rainfall. Tori mentioned corn prices, but I always use Omaha corn prices just because that's cattle feeding country. You know, in 2025, we had a dollar range from 380 to 480, and that range is even tighter so far this year. We haven't seen much more than a maybe a 40 to 50 cent change in price throughout the first 5 months of 2026. Uh, we probably have already missed that opportunity if for corn producers to lock in that $5 corn. There could be certainly some production situations that change prices. Really good growing season should push corn prices even lower. So that means feeding cattle is going to be pretty inexpensive. We'll have cost to gain around a dollar for the most part. Uh, Hay prices, I don't know y'all's particular county situation, but I have in the southern Middle Tennessee region that I am in constantly, and I'm talking even in the same county, I've had people say that their hay this year has produced more than it's produced in any year in the past 15 years. And then I've had people say, well, we only produced about 60% of what we normally produce. And I don't really know how to take a read on that uh, because the moisture situations, the temperature situations were all very similar and so I don't know if it was management or what, but more than not have had really strong hay production so far this year. Really thick, even though, and I think some of that had to do with really warm weather that we experienced in March and April, even though we were a little light on moisture. I think that drove some of that production. Now we'll wait and see what the quality is on that hay because it may not be that great, but there is going to be a pretty significant quantity, and so I think that should result in local hay prices in most Tennessee, and for well any place where there's significant production, prices will be softer. If your county or your region has lower production than normal, then you're probably going to see an uptick in hay prices. So, talking about that cost of gain based off of Kansas data so far this year, a dollar and a penny to $1.04 cost of gain. And if those corn prices dip like I expect they will, if we have continue to have good rainfall, good moisture across uh, the Midwest, all the I states, if we continue to have good moisture there and good growing conditions, we're going to see these corn prices slip a little farther, which should bring the cost of feeding cattle down again. I mean, we might even see sub $1 cost of gain if we have that good of a corn year. I guess the number that Tori mentioned for the end of the month on actual plantings is going to be really important because what planting intentions were and what actual plantings were will be different because of fertilizer costs more than likely. Uh, putting corn in the ground this year was a tough decision from the standpoint of knowing what it was going to cost uh, from a nitrogen standpoint. And just speaking from my own experience, I ended up my pre plant application of nitrogen was $100 a ton cheaper than my side dress application of nitrogen. And in essence, I myself put about 30% of the nitrogen needs down at pre-plant, and then the other 70% as side dress. And it was $100 a ton higher. So that $100 a ton higher was on top of already high nitrogen prices to begin with. So there are certainly people that will have cut back those acres, which may end up coming back and saying, "Hey, we're going to bump this corn price higher because we just don't have the acres in the ground." Now this is a chart going back to the beginning of the year for August feeder cattle. And you can see, looking back to let's see, Thursday, Friday, week ago, so that's 17 days ago or something like that, we had a huge decline. 2 days, or it'd been 2 weeks ago today, I guess technically, uh, when the market just fell apart. So 14 days ago. Um, Wednesday had a strong move up, and then Thursday down, Friday down, and it's just been down ever since and staying there. And unfortunately, I do think the futures market is going to continue to move lower. That does not mean that the cash price will move lower right now, but I do think there's going to be a tendency for the futures market to move lower, maybe even drop below 340 again. Uh, so I guess my point in this is, if you have producers that are wanting to purchase LRP or manage some of their price risk for a sale, I don't really think this is the time to do it. Despite here, I think cattle prices are going to drop on the futures market. I do think they will rebound prior to August. So we're going to have a few more weeks or a couple of weeks of lower futures prices. Cash prices will probably stay fairly steady. And then I think we'll finally see a rebound in the futures market. So just keep that in mind if there are people that are thinking they want to manage risk. But yesterday everything was down $2 to $3, maybe at 355 is the highest for September and October. It's been a tough time on the futures market, and probably will continue to be for the next week or two. So finished cattle prices, I think, are still going to stay around 250 for the most part as we look into the rest of the year. Uh, there's a lot of uncertainty here with where I think prices are going to be for 5 to 6 weight steers and yearling cattle. But just because the futures market is telling us something totally different than what the cash market's telling us, and they're going to find each other to some degree. So just keep that in mind, that they are going to find each other. But I mean, for the cow calf producers out there, there's still going to be a lot of money, even if prices decline 10%. 10% would be a $40 loss, and yet we'd still be near $4 for a 550-pound steer. So that's hard to be too disappointed in. With that, I think I'll stop sharing, and we can open it up for questions.